If you're sitting there in Tacoma right now, or Seattle for that matter, staring at IRS notices and wondering whether bankruptcy can actually wipe out your tax debt, you're not alone. Most people I talk to have the false idea that you cannot discharge IRS taxes in bankruptcy. They assume taxes are permanent and there's nothing that you can do about it. And by the time clients call my office, they've usually lost sleep over levies, wage garnishments, or the fear that the IRS could clean out their bank account at any moment or take their home. Here's the truth. In some cases, IRS income tax debt can be discharged in bankruptcy, but only if very specific timing and filing rules are met. If you get it wrong, you can end up in bankruptcy and still owe the IRS every dollar. I'm John Sterbick, a tax attorney and bankruptcy here in Tacoma, and I've helped people navigate both IRS collections and bankruptcy to figure out whether or not their tax debt actually qualifies for a discharge. In this video, I'll walk you through the exact rules that determine whether your IRS tax debt can be wiped out, so you can find out if bankruptcy is a real solution in your case, or if we need to look at a different strategy before IRS takes the next step against you. Not all tax debt is treated the same. Some IRS income tax debt can be discharged if you meet the right conditions. So if you're hoping bankruptcy might finally give you breathing room from the IRS, good news. It might, but there's a test we use to find out. It's called the 3-2-2-40 rule. The 3-2-2-40 rule is explained this way. 3 numbers, 3 rules, 3 years, 2 years, and 240 days. Let's break it down. The 3-year rule is this. The tax return must have been due at least 3 years before you file bankruptcy. So if you owed taxes for 2020 and that return was due April 15th, 2021, you'd need to wait until at least April 15th, 2024. Unless you file an extension, now we're talking October 15th, 2024. The 2-year rule. You must have personally filed that return at least 2 years before bankruptcy is filed. If you filed late, the 2-year clock starts from your filing date. Number 3, the 240-day rule. The IRS must have assessed the debt at least 240 days before you file. Assessment just means IRS officially recorded that you owe the money. Sometimes you file a return 2 years ago and a year later, they assess you more because of unreported income like gambling. We checked the timelines. For 2018, the return was due April 2019. She filed May 2021. We waited until July 2023, 2 years later, to file her bankruptcy. The timing made all the difference. Her 2018 IRS tax debt was discharged. The wage garnishment stopped immediately. She walked away with peace of mind and a fresh start. Sometimes I tell my clients that I'll give them a certificate saying no debt. Therefore, they can live in Dubai. The rent's stiff, but nonetheless, they can definitely live in Dubai when they have no debt. What if you don't qualify? Even if you don't pass the 3-2-2-40 rule, bankruptcy can still help. In Chapter 13, you can force the IRS into a 3 to 5 year payment plan. And by the way, interest and penalties stop accruing once you put it into a Chapter 13. Chapter 13 can stop garnishment and levies while the case is active. Wipe out other debts like credit cards, medical bills, freeing up cash, actually allowing your budget to work. So don't rule it out. You may still have options. Special note, federal versus state taxes in Washington. If you live in Washington, you don't have to worry about state income tax. Yeah, we don't have one. But if you owe business taxes or property taxes, those follow a different set of rules. This video is specifically focused on IRS federal income tax. Common mistakes that hurt your case. Here are the biggest mistakes I see people make. Filing too early, when waiting a few months would have made the debt dischargeable. Premature filing is not a good thing. Not filing returns at all, which makes discharge impossible. Ignoring IRS notices, audits, or appeals can pause the 240-day clock. Missing out on automatic stay, which could stop the collections immediately. If you're close to qualifying, waiting might save you thousands and thousands of dollars. What you should do next. Here's what I recommend. Get your IRS account transcript. Note when each return was due. Note when you filed. Note when the IRS assessed it. Compare those dates to the 3-2-240 rule. And don't make any moves, including filing bankruptcy, until you know where you stand. Keep in mind, I happen to be a tax attorney in bankruptcy, and I understand both. A bankruptcy attorney may not understand the 3-2-240 rule and the significance it makes in the dischargeability of IRS tax debt. If you're wondering, how soon can I actually get the IRS off my back? That's exactly what I cover in this next video. We'll go over timelines, what to expect, and how quickly you can stop wage garnishments. Sometimes within hours. Click through to that video now if you're ready for relief. I'll see you there.